Eimear, let me first ask you about the pound. I guess you want to be short the pound into this situation, or do you think the move down has been overdone?
No, we're definitely advocating lower levels for sterling, and we actually see this both on Brexit but other factors. If you look clearly at what rates markets are pricing in, the Bank of England has been one central bank where the markets have been quite reticent to price in aggressive easing. For example, I think the rates market is pricing in about 26 basis points of rate cuts from the Bank of England, which is pretty much comparable to what's priced in for the Swiss National Bank, when actually, the SNB's benchmark rate is at minus 0.75%. Whereas the Bank of England is at positive 0.75%. So arguably the Bank of England have a lot more policy ammunition to really ease policy, and they're not going to be immune to this global slowdown in demand and what's happening in the manufacturing sector globally.
Yeah, will they want to do that? I mean, I thought Mark Carney was trying to steer expectations towards a hike, and you're saying that we're pricing in cuts.
Yeah, the market currently is pricing in cuts, and I think this was kind of reinforced at the sea change Mark Carney speech, where he put a lot of emphasis on what's happening globally. So the global backdrop in terms of weaker demand, that uncertainty seeping through into fixed investment. So I think going into the rate decision this week, I think what will be really key is how much emphasis Carney puts on what's happening globally in terms of external weakness in demand and global trade uncertainty, as opposed to what's happened domestically and Brexit concerns.